Okay, let's dive right into this. Welcome back to The Explainer. This is the only place where we transform really complex financial data, SEC filings, and market-moving news into clear, undeniable visual insights. I'm your host, and today we're looking at a story that has absolutely set the entire financial world on fire. Joining me as always is our chief investment analyst who has been tirelessly tearing through the corporate filings, the clinical trial data, and the balance sheets to figure out exactly what is going on behind the scenes. Look, we are talking about a company that has reached a financial milestone that was previously reserved exclusively for massive tech monopolies. We're talking about the absolute titans of Silicon Valley, not pharmaceutical companies. It is great to be here. If you look at the data, the pharmaceutical landscape has fundamentally shifted over the last 12 months. The numbers we are about to break down illustrate a massive structural change in healthcare economics. We are looking at a totally new paradigm. I absolutely love the energy, but let's not bury the lead here. We are talking about a historic, earth-shattering valuation that has caught a lot of retail investors completely off guard.
I mean, wow, this is crazy. A $1 trillion market cap for a pharma giant? Look, we've all seen tech stocks like Apple, Microsoft, and Nvidia hit these astronomical numbers, but a company making diabetes and weight loss shots? Analysts, you've got to tell me, how does a pharmaceutical company get this incredibly massive? Over the past year alone, Eli Lilly shares are up more than 45%. We are talking about a stock price floating around $1,132 with a $1.1 trillion market cap. How exactly did this happen? And more importantly for the folks watching at home, is this just a massive hype bubble, or is it backed by actual undeniable cash flow?
It is heavily backed by real cash flow and very strong forward projections. If you look at the data here, Eli Lilly officially became the first pharmaceutical company in history to cross that $1 trillion threshold late last year. To really understand how they achieved this unprecedented scale, we cannot just rely on market sentiment or media hype. We have to strictly look at their operational performance and their medical pipeline developments. There are three specific, verifiable factors that have pushed their valuation to this historic level.
And this brilliantly illustrates exactly where we need to focus today's explainer. Precisely. It's proven by the numbers. First, we have the explosive expansion of their GLP-1 empire. I am talking specifically about the drug tirzepatide, which is marketed as Mounjaro for diabetes and Zepbound for weight loss. According to the data, they currently hold a dominating 60% share of the US GLP-1 market. They have successfully surpassed the former market leader Novo Nordisk. Second, we are looking at massive first-quarter revenue and earnings growth. We are not just talking about minor incremental improvements here. We are seeing triple-digit earnings growth. And third, they are executing aggressive pipeline diversification through mergers and acquisitions. They are taking the massive cash flow generated by their weight loss drugs and systematically acquiring clinical-stage biotech companies. This is how they build a permanent moat against future patent cliffs.
Okay, wait a minute, doctor. What does that have to do with our stock accounts? GLP-1 empire expansion, pipeline diversification via M&A? Honestly, that's just way too complicated. The folks watching right now want to know how the actual business model works before they even think about putting their hard-earned money into this stock. Could you give us a really simple analogy? Can you explain this like I'm in elementary school?
Absolutely. Let me break this down for you. Imagine a bakery that invented a magical cupcake that actually makes you lose weight when you eat it. People are literally lining up around the block paying top dollar for it. That magical cupcake represents their core GLP-1 drugs, Mounjaro and Zepbound. Now, the bakery is smart. They know that eventually the secret recipe for that cupcake will become public knowledge due to patent expirations. So they are taking all the massive immediate profits from selling the magical cupcakes right now and using that cash to buy the absolute best pie, cookie, and cake recipes in town from other smaller bakers. This strategy ensures that even when people eventually stop buying the cupcake or when generic versions appear, the bakery still completely dominates the entire dessert market.
Okay, so what you just said basically means Eli Lilly is using their temporary monopoly on a blockbuster weight loss drug to literally buy up permanent dominance in other disease categories. That makes perfect sense. Now let's move past the analogies to the actual numbers and see how this all builds up.
Let's transition right to stage 2 and look at the official Q1 2026 earnings report filed with the SEC. We absolutely must evaluate the actual financial statements to see if the market's wild enthusiasm is fundamentally justified. We will focus strictly on revenue, operating profit, and the underlying causes of their growth. The data clearly shows that their financial engine is firing on all cylinders, completely outstripping almost every single competitor in the large-cap pharmaceutical space. Now, what's really interesting to me about looking at this official Q1 corporate filing is that it shows we aren't just dealing with hopeful forecast right now, we are dealing with cold hard cash that is already sitting in the bank. Hit me with the numbers. According to their Q1 2026 10Q filing, Eli Lilly recorded an astounding $19.8 billion in revenue for just the first quarter. That represents a 56% year-over-year growth. Even more significantly, their adjusted net earnings per share absolutely soared to $8.55. That is a staggering 156% jump from the exact same period last year. Now, it is absolutely crucial to understand the exact cause of this increase. If you look at the SEC filing, this 56% revenue increase was primarily driven by explosive volume growth, not by price hikes. In fact, it was partially offset by lower realized prices for Mounjaro and Zepbound due to cash pay price reductions. This is vital. It means more people are actually taking the drug. This signals far deeper market penetration and long-term recurring revenue rather than just short-term price gouging. OMG! 156% jump in earnings per share? That is literally a tsunami of cash. But let me step in and play devil's advocate here for a second.
Look, they are making incredibly good money, clearly. But wait a minute, why is the stock far too expensive for our retail accounts? As a regular investor, if I'm looking at a stock price sitting way over $1,100 a share, hasn't the broader market already priced in all this good news? Are retail investors just showing up to the party after all the cake is already gone?
That is the exact question institutional investors are meticulously modeling right now. To answer it, we must look at their valuation multiples relative to their forward guidance.
The market is currently pricing Eli Lilly at a forward price-to-earnings, or PE ratio, of 37.5x. To put that into real context, the peer average in the pharmaceutical sector is just 23.1x, and the broader healthcare stock average is sitting around 16.9x forward earnings. So yes, you are paying a massive, massive premium today. However, the data explains exactly why the market accepts this. In their Q1 report, Eli Lilly management officially raised their 2026 full-year revenue guidance by a full $2 billion, now projecting between $82 billion to $85 billion. They also increased their non-GAAP EPS guidance to be in the range of $35.50 to $37.00. That would represent an earnings increase of nearly 50% at the midpoint. You are paying a premium of 37.5x because the earnings growth rate mathematically compresses that multiple very, very quickly if they manage to hit their targets.
Got it. So what you just said basically means this. The market is paying a massive premium today for a tsunami of expected future weight loss drug profits. You aren't buying what they did yesterday. You're essentially paying top dollar for the $85 billion they are promising to deliver tomorrow. Precisely. And this leads us directly into the broader industry environment, because Eli Lilly does not operate in a vacuum.
Let's move to stage 3, the industry environment and economic moat.
The broader megatrend we are analyzing here is the GLP-1 weight loss and cardiometabolic market. Current projections confidently estimate this market will approach $100 billion by the end of the decade. But dominance today certainly does not guarantee dominance tomorrow.
Exactly.
Novo Nordisk is right there breathing down their necks, and a dozen other biotechs are aggressively trying to invent a better magical cupcake. So what is their irreplaceable weapon against these competitors? What actually makes Eli Lilly's pipeline an impenetrable moat? Because if they are relying entirely on just two shots, Mounjaro and Zepbound, that sounds like a very fragile foundation for a $1 trillion company to me.
If you look at the clinical data and their recent acquisitions, their moat is rapidly expanding far beyond just those two injections. First, they just received FDA approval for Foundayo, which is an oral GLP-1 pill. What makes Foundayo a truly unique weapon is that it can be taken at any time of day without any food and water restrictions, unlike the older pills currently on the market. This massively expands their reach to patients who absolutely refuse injections. Second, look at the Phase 3 TRIUMPH-1 trial data for their investigational drug retatrutide. This is a first-in-class triple hormone receptor agonist. It targets GIP, GLP-1, and glucagon. The data showed nearly 20% weight loss at 80 weeks. That is delivering a level of weight loss that has historically only ever been associated with invasive bariatric surgery. Wow! Wait, bariatric surgery levels of weight loss from a simple medical treatment? That is unbelievable. Correct. It's proven by the numbers. And beyond weight loss, remember the bakery analogy we discussed? They are aggressively buying new recipes. They recently spent $2.3 billion to acquire Ajax Therapeutics to enter the chronic blood cancer space. They also acquired the vaccine company for $1.55 billion to target viral pathogens like the Epstein-Barr virus. Add to this their existing oncology portfolio, like Verzenio for breast cancer, and you clearly see a company using its GLP-1 cash to build an incredibly diversified, multi-layered economic moat. All right, so what you just said basically means their moat is built on turning current injection profits into next-generation, easy-to-take pills alongside aggressive buyouts of cancer and vaccine companies. I get it. But come on, nothing is perfect. As an investor, I need to know the true downside here. What are the fatal risks that could crush this stock? Because a 37.5x PE ratio means there is absolutely no room for error. If they trip, the stock tumbles.
The data points to several severe vulnerabilities that we cannot ignore. First is overconcentration. Despite their growing pipeline, Zepbound and Mounjaro still accounted for nearly 66% or two-thirds of their massive Q1 sales. If any safety issue disrupts that specific revenue stream, the entire valuation collapses. Second is fierce rivalry. Novo Nordisk has just introduced a Wegovy pill, and consumers generally strongly prefer pills over shots. Third, we have to look at the legal and regulatory filings. Eli Lilly is currently facing centralized lawsuits in a Pennsylvania court over claims of stomach paralysis side effects associated with their GLP-1 drugs. Furthermore, the state of Texas has officially sued Eli Lilly for allegedly bribing providers to prescribe its medications. Lastly, patent protections are strictly time-limited. When Mounjaro and Zepbound eventually face their patent cliffs, that 66% revenue pillar will face immediate generic competition.
Which leads us perfectly into our final stage: 3 survival scenarios for investors. Let's look at what this all means for the future.
Okay, that risk list is sobering. Lawsuits, extreme reliance on just 2 drugs, and incredibly aggressive competitors. How do we synthesize all this conflicting data into actionable logic before we actually make an investment?
We do this by constructing 3 distinct survival scenarios, based strictly on current market data and upcoming catalysts. Investors must monitor specific triggers to know exactly which scenario is unfolding. Let's examine the matrix. The bull case is optimistic but entirely plausible if specific preconditions are met. The trigger here is flawless execution of their pipeline, specifically the rollout of Foundayo and retatrutide, combined with total PBM or pharmacy benefit manager access. Recently, all 3 largest US PBMs agreed to cover Lilly's obesity portfolio. If this access translates to unrestricted commercial and Medicare sales, the 37.5x PE is mathematically justified by the resulting earnings explosion, and the stock approaches fair value estimates as high as $1,477 per share. The base case, which is neutral and highly feasible, assumes steady market growth for GLP-1s but with persistent pressure from Novo Nordisk and minor pipeline delays. In this scenario, the company hits the lower end of its $82 billion revenue guidance, and the stock essentially treads water, maintaining its current premium valuation without massive immediate upside. The bear case is pessimistic but absolutely critical to monitor. The trigger here would be severe legal losses regarding those stomach paralysis claims, intense FDA safety scrutiny, or Novo Nordisk completely dominating the oral pill market. Because the stock trades at such a high premium, any miss in expected earnings will result in a steep price drop due to severe multiple compression. If growth slows from 56% down to 15%, the market will absolutely not pay 37x earnings for it.
Price is what you pay, value is what you get. That classic Warren Buffett quote perfectly encapsulates Eli Lilly right now. You are paying a sky-high price today, but if their pipeline actually delivers on curing obesity and funding the next generation of cancer and viral pathogen drugs, the value you get over the next decade could still be completely historic. But the real question is, are you willing to pay a historic premium today for the promise of medical dominance tomorrow? Or will you wait for the generic? Thank you for watching today's Explainer. Your subscriptions, likes, and supportive comments are a huge encouragement for our Explainer production. Keep learning, stay focused, and we'll see you in the next one.